Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at the Tuscan Holdings stock. This is a SPAC that is merging with Microvast. This could be one of the best EV battery manufacturers that we've looked at in a long time. So I wanted to give you my thoughts as well as my Microvast stock price prediction for the end of 2021. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family. We've got an amazing community, a bunch of like-minded individuals constantly trying to help each other. You'll also get access to the private Discord where we talk stocks. You'll get links to 5 portfolios so you can see exactly what I invest into. Then anytime I buy or sell a stock, up to the second I do it, I send out a notification so you can follow along. I also send out high-value swing trade setups just like these. We've had a lot of winners lately. Then anytime I map a chart or I've got a watch list, anything that can help us become better investors. I also spent the weekend recording some educational videos on fundamental analysis and technical analysis that I will be posting periodically for members only. So if anybody wants to really take their investing to the next level, come on over. I think you'll get a lot of value out of it. Day one squad, I love you guys so much. Thank you for your support. It means the world to me. But let's get started, guys. So in today's video, we're going to go over Tuscan Holdings stock. This is a SPAC that is merging with Microvast. Microvast is a EV battery manufacturing company. They're actually one of the leaders. They really kind of manufacture their own batteries. They design them from the ground up. They do everything. A lot of really good things here, guys. I actually noticed this stock clear back when I first invested into Lightning E-Motors, and I decided to just kind of pass on it. I didn't do a deep enough dive, but one of the day one squad, Michael, shout out to you, kind of put it back on my radar, and I went and did a deep dive in it because he wanted me to make this video on it. And this is a good one, man. Good job, Michael. Honestly, this is one of the best EV battery manufacturing stocks I've looked at yet. So we'll take a look at why I feel that way. We'll also take a look at the chart, some of the investor presentation. Then I will give you my Microvast stock price prediction for the end of 2021. So let's get started. All right, guys. So first thing we will start with is their website. Real quick before I get started, guys, this merger between Tuscan Holdings and Microvast is set to complete at the end of July on the 31st. They are having the meeting on the 16th of this month. So if you do own it, make sure you voted on it. So that there is no issues with that combination. When the combination is complete and post-merger, the stock will then start trading under MVST instead of the Tuscan Holdings where it's at now, and they will receive $822 million in proceeds from that combination that they can use to expand and grow the business. Guys, this is one of the more vertically integrated EV battery manufacturing stocks we've ever looked at. They were founded back in 2006. They mainly focus on the lithium-ion batteries. They do control all of their manufacturing as well. So unlike what a lot of the other EV battery manufacturing stocks do is kind of design and build their batteries to fit in existing EVs, they design and build their EV batteries from the ground up, really kind of addressing the main issues and problems that come with EV batteries, like slow charging times or, battery density or lifetime, all of these different things. The other thing is the fact that they control manufacturing gives them a much higher quality control, and then obviously keeps their costs down, which is fantastic for margins. So they have an ability to create higher margins, faster production. And I did see that once the merger completes and by 2022, they are actually building a world-class facility where they will be able to produce much more batteries. As of right now, they mainly produce batteries for commercial vehicles. So like semi-trucks, delivery trucks, buses, trains, but they do have a goal to expand into other vehicles and other segments in the future, like passenger vehicles, consumer electronics, things like that. Like I said, guys, this is their website, so you can come take a look at this. If you want to do a little bit deeper dive, they do have some good information on here. Let's jump over to the investor presentation. So this is some facts about their company that I thought was really interesting. Guys, like we've talked about, a lot of the EV SPACs that we invest into right now are like pre-revenue, no revenue. They don't have any products out there in the market. Nobody's tested them. They've never had to go through production. Microvast has gone through all of those issues. They have batteries out in production. Look at this, over 30,000 battery systems in operation right now. And it's not just in one place. They're in over 19 countries and 160 different cities. And total overall, they've driven over 3.8 billion miles with their batteries. That is very impressive. Like I said, they are one of the more vertically integrated and fully owned proprietary technology portfolio with over 550 patents or patent applications. So they've got a tight, rein on all of their products and systems, which is very important. Now, as far as revenue goes, like we can see here, guys, in 2020, they did $100 million in revenue. If we think about Lightning e-motors, they only did like 9 or 16 in 2020. It was not even close. So these guys have revenue and they're doing pretty well, especially for a new SPAC company in an innovative industry. They've also got a projected 2025 estimated revenue of $2.3 billion. To go from 100 million in 2020 to 2.3 billion in 2025 is huge. Now, when this company says it, I believe it a lot more than when a company like QuantumScape says it, because they actually have a proven system. They've got a pipeline. They've got, contracted deals. They've got a lot more in the works and actually happening. They're an actual business. Next thing I wanted to show you guys is just the opportunity for adjacent markets. Like I was saying earlier, if we take a look here, the total addressable market that they've got in front of them is about 45 billion by 2025. That is absolutely insane. You can see here that the passenger vehicles could be potentially 22 billion, and that industry will grow at a 34% compounded annual growth rate. Energy storage solutions, this is another one that I think is very interesting. The market is expected to grow at around 21 compounded annual growth rate with a $20 billion total addressable market, and then consumer electronics. Not too sure how I feel about the consumer electronics business, but nonetheless, it could be an extra stream of revenue. So I'm not going to deny it or dismiss it. Could be potentially something that generates revenue. And with $2 billion, even if they capture 10% of that, that could be potentially that extra amount of revenue that pushes them over the edge and gets them where they need to be. So very good to see there. Now, I did want to take a second and kind of look at Microvast's batteries against some of the leading battery electric vehicle companies out there and some of the competitors. As you guys can see here, they are one of the leaders in this industry with around 20% greater range than a lot of the other vehicles. You can see here that they can go up to 370 miles from just one charge. They can also charge at 3 times faster. You can see here 12 minutes to get you to 70% state of charge. Like we've talked about before, guys, kind of that 15-minute threshold. You've got to be under that. So they're getting about 22 miles of charge out of every 1 minute, or 22 miles of distance out of every 1 minute of charge. That seems pretty standard for me. You can see over here that the standard, competitor is only getting about 6 miles out of every 1 minute of charge. So they're blowing them out of the water there. And then 3 times the lifespan. So the battery's going to last 3 times as long, and 4 times lifetime mileage. So they're getting much more lifetime mileage out of their batteries. This is, obviously, guys, benefits that every single battery manufacturing company is going to be striving for. So, who knows? There always could be competition that comes in and steps in front of them, or, produces a better system that goes, farther or charges faster or whatever. But as of right now, based on this investor presentation, they are saying that they are doing better in these areas by these metrics. So until I, prove them wrong, I have to take that as face value. Now let's jump into the fundamentals, guys. This is really the important stuff. I want to kind of look at how they are going to grow, what margin percentages they're going to have, what the EBITDA is. And so that way we can get a much better idea of the valuation of the company. So as you guys can see here, the revenue is split up into 3 different segments. They ended up doing around 101 million in 2020. So they're projecting to do 230 million in 2021, which is 126 compounded annual growth rate from, 2020. And then if we take a look at 2022, look at that, another 100% compounded annual growth rate to go to 460 million. From 2020 to 2025, guys, 87% compounded annual growth rate on that revenue. That is very impressive. When we look at other SPACs that are showing that type of revenue growth, but they have zero revenue, it's much harder for me to believe. But when you've got 100 million and you're going to scale it from 100 to 200, that makes me much more confident that they could actually do it versus not ever even selling a product. They've got a ton of batteries out there. They've got a ton of different production. They're opening up that new facility. They have all of the things necessary to hit these metrics, and it is much more impressive than a lot of the other ones. As you can see here, by 2030, they are expected to be doing $6.8 billion in revenue, guys. That is massive. If they can hit these metrics, this stock will be multiples of where it is today. If we take a look at the adjusted EBITDA, they actually are going to hit positive adjusted EBITDA this year in 2021. Projected. So they're projecting to do about 12 million in adjusted EBITDA in 2021, scaling that to 71 million in 2022 and getting all the way up to 465 million in adjusted EBITDA by 2025. You can also see here that the adjusted margin for the EBITDA is pretty consistent and will be all the way up to 20% by 2023, and they will jump that to 23% by 2030. So really nice adjusted margins there, especially on a manufacturing business like this that traditionally have lower margins. And I do think that their in-house production and manufacturing facility will help that and keep their costs down. The biggest thing I really wanted to look at, guys, is the pipeline and what they've got in the works. Guys, look at this. As of right now, they've got $5.9 billion in identified opportunities. So that is pipeline. That is deals that are in the pipe, ready to rock, that they've got to just get signed. As you can see here, the total probability of weighted pipeline. So those are the deals that they're like, we are pretty positive we are going to get those deals and get those, under contract and get that revenue. Now, 1.5 billion of that 5.9 is already contracted and in the pipe through 2027. So 1.5 billion in revenue is already signed. It's already contracted. It's theirs. So that will get them all the way out to 2027 to hit their metrics pretty consistently. I also read, guys, that they have 2 other global consumers or global customers that they're in talks with to do an additional 3 billion in contracted pipeline revenue. So if they can get that contract, that will be a huge catalyst for this stock and really push it forward and get them even more secure for years to come. So that is everything we want to see, guys. When they've got a big pipeline, when they've got a lot of it already contracted, when they've got products in the market, that is what makes me so much more confident in investing in these types of growth stocks, because you know that they're not going to go out there and release their product and the market's going to say, nope, that is poo-poo. We don't want that. Now, contracted revenue represents 25% of 2021 and 2025 estimated revenue. So it doesn't take care of all of it, obviously, but it does give them a nice chunk of that. And as they do more and more business and people see it, that will help them, reach more clients and kind of broaden their horizon. Now, multiple additional contracts expected, dialogue ongoing with OEM customers. I do think that the OEM customers is going to be a very crucial part of this. They've obviously got to get deals with big OEMs that are just contracting them and they're just kicking out batteries one after another to put in those specific OEM batteries or OEM vehicles. Now, one of the big risks here, guys, when we looked at QuantumScape, we saw that those solid state batteries, they may be pretty far off until they are perfect, done, and ready to go to market. But even if they can get them there in 2024, 2025, that could be a big issue for a company like this. However, I do think that Microvast can get far enough ahead of it and do enough business to generate enough revenue, enough resources, enough, R&D that by the time QuantumScape or those types of companies do come out with those solid state batteries, Microvast could be well ahead of that and, already taking steps in that direction. Obviously, if someone like me is already seeing that concern, so are they. So they probably have some type of game plan to combat that, but I do see that as one of the big risks here. If those solid state batteries come out and end up being much further superior, than these Li-ion batteries. So very nice to see here, guys. We want to see this contracted revenue. We want to see the pipeline. That is everything. Now let's go ahead and take a look at the chart. So as you guys can see here, this stock hasn't been trading for that long. on all these SPACs, you see them, they're just $10 for, all these months. And then as soon as they get, word of a target company to merge with, the stock starts popping. This was back in December when all of the SPACs were running like crazy. It didn't matter what you did. You could say that you were merging with a lemonade stand and your SPAC would run 100%. But you can see here, big pop right here on initial announcement. Did get rejected around this area, price point of around 1278 to 1353. Sold off a little bit, but then right when it broke, it ran all the way to $17.60 before trading off and turning this area into support. So guys, this is going to be your major inflection point right here. This area is where anytime the stock gets in it, it either makes big pops or it makes sharp falls. So you get, rejected, it just gaps right down. Instead of holding there, it is currently in that area as of today. But you can see it ran all the way up to a high point at one point in time and reached $25.07. But since beginning of February, the stock retraced and lost over 100% of its value. Well, pretty dang close. I mean, it ran and gave up all of that $25 high point and came all the way down to that $10 NAV price. Now, one thing I will say here, guys, is this is not like some of the other SPACs that got pushed way past their NAV price, like Lightning eMotors, Romeo Power. After the merger, Romeo got killed. So it is pretty impressive to see that while they were still in SPAC phase, they stayed right there at that NAV price, despite how badly the market was destroying SPACs at the time. So it is showing strength there. I mean, after over a 90% retracement, I would hope that you would see that type of strength. But you can see it fell below this inflection point in the end of March. Hasn't been able to get above it since. However, it did just break through it right here on June 8th. It did try to back test it, wasn't able to hold, but did end up finding support above the 50-day moving average before running above it. Now look at this. You get this spring, you get this back test, couldn't quite hold, but however, it did try to hold this area from back here in May. Now you did run up and then you got that back test right there. So you run up, you get that back test, you are now advancing. One thing I want to show you guys, if we take a look at the volume, you have that bearish divergence right there. That is clear as day, classic bearish divergence, which probably is what ushered in that sell-off and decline that happened right here, which was very, very small. So you did have some of the highest positive momentum in the stock since you had seen since clear back here in the beginning of March, and as well as the highest level of negative momentum that you had seen since March. So there is a lot more volume getting back into the stock, a lot more momentum. I do think that now that we have broken this area, you are in pretty good shape, especially the fact that it back tested and showed as support. If we take a look at the daily, guys, it is, making those higher highs and higher lows. We made that high, recaptured these areas here. This is really the area that we need to recapture, is that $15.99, $16 range, currently sitting at $14.80. So you break this area. This is a little bit of a, a resistance point, but I think once you break this, $16 range, you're going to run to 20 really quickly. You break that 20, you're going to run to 25 really quickly, because you just don't have a lot of historical price action that create those steel walls. You just have those high points where they get rejected. So in areas like this, you break that 16, you're going to run to 20 because that's more of your main, area. And then you're going to run to 25 after you break that $20 range. Guys, I actually really like this stock. I do not currently own it, but I am definitely going to start watching it. In my opinion, now that we've gapped up, I would like to see it fall down right here and back test it and confirm it as support for a third time, or at least that second time before making an entry. I don't want to buy it here at the $15 range, because you get to 16, you get rejected, it trades back off to $13.60. The fact that I'm not in it, I would wait until you get that confirmation of this level that it is going to hold it as support for sure. You are reaching some of the highest levels of RSI and overbought that you had seen since back here in February. One thing that is nice is you did break this downtrend that you were having, and you were, able to break it back here in May. So you are looking pretty good here, guys. You are coming up and getting close to overbought, which you could see it pull back a little bit. But I mean, look at this. You get up to areas like this, you think it's going to get to overbought. It just spikes, runs clear up here trades off, you think it's going down, you know what I'm saying? So this isn't a clear indication that you are going to be overbought and pull back. One thing I like to look for, guys, is an edge. I want bullish divergence. I want hidden bullish divergence. I want something that gives me a clear, concise indication, those coinciding variables that shows me that we have a greater than 50-50 chance that it's going to go one way or the other. Overall, I think this area is a really nice area because of this inflection point. I like the company overall for the long term. If they can execute, they can hit their goals, they can do what they need to do, this stock should do very, very well. I will be looking for an entry on this stock. My ideal price point would be in this inflection point between 1278 and 1353. So that's it for today, guys. Thank you so much for watching. I really appreciate it. Like the video if you get any value out of it. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon if you want to be part of a great family and you know, be part of a community. And I will see you guys in the next one. Peace.